Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we are talking about the world's largest home improvement store. We're talking about Home Depot. Thanks a lot for joining us today, and we'll go ahead and start with today's daily stock analysis. Thank you for joining me today. If this is your very first day, go over and hit the like button, hit the subscribe button, because there's lots of good information that comes to you every single day. If you're listening to me on a podcast, subscribe to the podcast. You'll be surprised at the amount of information that you get from the next 20 to 25 minutes. It's a great deal of information. So let's go ahead and begin in today and see how things are working with Home Depot. As we do that, the first thing that I want to do is I want to stress our sponsor, which is really Richards Financial Planning. Richards Financial Planning is there for you to help you plan your financial future. If you're frustrated with what's going on in your life financially and you need some help in organizing things, go over to richardsfinancialplanning.com and learn about the prosperous planning process. Now, when we talk about Home Depot, size is everything. The company in itself is really the world's largest home improvement store. They have nearly 2,300 warehouse format stores. They have 30,000 products that are in store. They have 1 million products that are online. They're in 3 different countries, the United States, Canada, and Mexico. In total, the company is worth about $294 billion. They had a really good day today in the market. They ended up 2.7% at 275.59 when the market itself was down because of a lot of different bad things that are happening right now. Well, not really bad things. I hate to sound so down from that standpoint, but there is a lot of unemployment out there. There's questions about what's going to happen with stimulus. We're going to talk about that just a little bit too. And there's questions about how the economy is going to go toward the future. But home improvement is one of the bright spots that's out there. So let's begin, and remember that if this is your first time here, we do 3 things. We look at the stability, the earnings, and then the competitiveness of the company. That's our recipe. If you use this with whatever stock that you are considering investing in, this will help you find the investment that will fit your investment preferences. So the very first thing we want to look at is we want to look at the competitive nature of Home Depot. And the biggest thing that they have going for them really is going to be that they're big. This is the moat that Warren Buffett talks about. It's the imaginary barrier that's between them and their competitors. When you talk about proprietary assets, you might think about patents and things like that, but proprietary assets with Home Depot is really going to be their brand. A lot of people go to Home Depot because they're used to going to Home Depot for years and years and years. They have tremendous customer loyalty, and they have a big size advantage. They can make bargains with their suppliers, and they have a lot going for them from that standpoint. Now, let's look at the earnings. How are the earnings working with Home Depot? In 2020, now this is just for the 9 months of the year, ending if November the 3rd for 2019, ending on November the 1st for 2020. And when we look at what happened in that 3-month time period, in 2019, they had about $8.7 billion in net earnings. In 2020, that really jumped up to $10 billion. They had a 14.24% increase in earnings. Now, earnings are important, but when you're growing as a company, it doesn't matter whether you're small or whether you're big. You have to keep an eye on the bottom line. Now, the numbers that I'm going to give to you are baked into the earnings. That means that the earnings are after the expenses. That's what we're going to be looking at, is the costs and the expenses of the company. In 2019, they had costs and expenses of around $16 billion. That jumped up in 2020 to $19 billion. So that's about a 20% increase in expenses and costs that are in there. But that is after, as I'm going to say, the earnings. Now, when I gave you the earnings a minute ago of 14%, that's after this 20% cost and expenses. Now, how did that come out to the actual shareholders? In 2020, they had diluted earnings of $9.28. That's up from $7.96 of the previous year in 2019. That's a 16.58% increase. So Home Depot is doing really pretty good. Now, here's 3 moves that they have taken to increase shareholder value. Number 1 is they had good debt repayment. Number 2 is they have a stock repurchase program, which is helping shareholders. It's actually building value. They've actually, between shareholders and dividends, which is the third thing, they've actually changed the value, or they have either given back or helped the shareholders' value by about 20% in total. Now, when I talk about their long-term debt, in 2020, they actually reduced that by about $1.8 billion. That's about the same in line as it was for 2019, right around $1 billion. Now, when we look at the repurchase of shares is kind of a confusing thing, because you might be wondering, why does a company buy shares back? Well, one reason is that the executives, the management of the company may see, it's a signal that they see the actual share value as being undervalued. And that really is going to be an opposite of what some of the analysts are saying, but the management really thinks that there's a lot more room to grow out there. They had a stock repurchase in 2020 of $791 million. That's a little bit less, actually quite a bit less than 2019, where they repurchased $3.9 billion. And when we talk about dividends, this is actually what's coming to the shareholder. And we're going to emphasize dividends just a little bit, because with the change of the administration in Washington, dividends are going to be affected quite a bit. They're going to have a big effect on the shareholders in itself. In 2020, Home Depot paid cash dividends of about $4.8 billion. That's about the same as they paid in 2019 at $4.4 billion. And that, my friends, is a 2.24% dividend. We absolutely love dividends, because dividends is what makes a company grow in total. And not every company in itself. And I want to point this out. There's really 2 different choices that a company has for growth. One is going to be dividend growth, and the other is going to be growth through capital gains. Capital gains growth is really only influenced by the market. However, when dividends are the reason that a company is growing, that's influenced by the markets and management. Now, you can actually choose which one of those types of investments that you want. If you are an investor that needs income, then you may choose this type of investment. Home Depot, that pays that 2.24% dividend, or, that's what's paying right now. It changes as time goes by with the value. But if you're looking for more growth, hold on a little bit, because we're going to talk about some other home improvement stores in just a little bit, or resources, and the growth on those too. Now, when I talk about taxes and how that's going to affect dividends, I want to delineate that just a little bit. Right now, the income tax bracket goes 10, 12, 22, 24, 32, 35, and 37. With the Biden administration, they're suggesting that they may change the top bracket back up to 39.6. So if you are depending upon income from dividends, then income is that's how they're going to be taxed to you. And I'm not here to give you tax advice, but I want to point this out of how your dividends could be influenced in the future. Now, one reason that some people will pick a dividend-paying stock over top of a growth stock is going to be the way that the growth is taxed. Capital gains right now, there's 3 different brackets. There's 0, 15, and 20. What the Biden administration is suggesting that may double up to 40. Now, that's only really for high-income earners. However, here's the big difference, the step up in basis. Now, let me explain this to you just real briefly. when you die, you're going to have assets in your portfolio. And for those of you that are outside the United States, bear with me just for a minute, because I want to talk to our friends here in the United States and how taxes will affect them. Now, I'm not giving you advice. I just want to tell you how this is going to work. If you have a stock portfolio and it grows and grows and grows and grows in value in capital gains, and when you die, you can pass that portfolio on to your heirs, outside of your spouse, without any capital gains tax. Now, what the Biden administration is suggesting, and it's a good possibility this may happen, we'll just have to wait and see, get our crystal ball out. What they're suggesting is that the step up in basis, or that capital gain that happens when a person dies, goes away. That could be a big, big deal as you have stocks that grow over the years. One of the reasons why dividend paying stocks may be to the advantage of people is you pay taxes as you go along. So if you die and you pass this account on to one of your heirs, then the taxes on it is going to be less because they're not paying capital gains tax. Those gains have been taxed in dividends over the years. So if this sounds a little bit overwhelming, look, talk to your accountant, your CPA about this, because I think that this can make a big difference over the long term. All right, let's get back into it, because we're not here really to talk about taxes. We're here to talk about value. So let's look further at the earnings. Now, what I've put up on the screen right now for those of you that are just listening is a chart that shows the earnings on a quarterly basis of Home Depot stretching back to the fourth quarter of 2015. And what you see every single quarter is it gradually tends to go upwards. It goes down a little bit sometimes, and right now we are in a downward trend from the fourth quarter, or going into the fourth quarter, but it trends upwards. So if we're looking historically at earnings, historically earnings have been very good and dividends have been very good. But I have to remind you, friends, that the past performance is not going to be a guarantee of what happens in the future. And I have to stress that, especially as we go into the next point, which is looking at actually what happens to the value of this stock over the past year. If we get into the Wayback Machine and we go back to January the 15th of 2020, we see that the value of Home Depot was at $219.41 per share. When I did this a little bit before the close, the value was at $275.87, and it really closed at $275.59, really close. So over a period of a year, it's grown by 25.75%. That's really good. Now, remember though, hey, past performance is not going to guarantee the future results. I always have to keep telling you that. I also want to pull back the perspective just a little bit further and look 3 years backwards, so we can look at what's happened over the past 3 years. If we go back to 2018 to January the 16th, we see that the value of the stock was $182.57. And there again, when we end the day at $275.87, that's a 51.1% growth over that 3-year time period. Now, if you do the APR, the annual percentage rate, hey, that comes out to 14.75%. Oh, and let me remind you, this is before the dividends. Dividends are not baked into this. But remember, again, we're talking about growth and past growth, and it's never guaranteed. The past performance is not going to be a guarantee of what's happening in the future. We have to talk about that perspective too when we look at what the guidance is from Home Depot and from different analysts. Guidance is important because sometimes the company wants to be able to, not sometimes, they always, when they give guidance, they want to give shareholders some reassurance on what the next year, what the next quarter may be. Home Depot's guidance in that came out from the previous quarter, they anticipate sales growth to continue at 3.5 to 4% for the entire year. And really, this is quite shocking in my opinion. This is from analysts. They're saying they're anticipating that Home Depot's growth will average, their sales will average 7% per year over the next 5 years. That's really pretty good. But remember, guidance is not a guarantee. This is just an opinion. All right. And also, I want to take just a brief moment and talk you about today's sponsor, our second sponsor of the day, which is Advice for Life Insurance. Your family needs you, and you can protect them with life insurance. You can find the best life insurance at the lowest price in less than 5 minutes. Go over to adviceforlifeinsurance.com and learn more about how to protect your family. Okay, so let's go into talking about what the bulls and the bears are saying about the stock. Now, the bullish investors, the bullish analysts are saying the same thing that I've talked to you about before, that the size of the company matters and the housing market is going to invigorate growth. The housing market, that means there's people that are buying used homes and they're moving in and they're making changes and they're improving it. Also, the stay-at-home phenomena is going to be a big, big deal. The stay-at-home phenomena is also going to be affected by anticipated stimulus. You heard Biden talk last night actually about that he wants to give every American taxpayer $1,600. And that $1,600 is needed by a lot of people, but there are some people out there that are not going to need that as much. And what that's going to do is it's going to boost the economy going forward. And $1,600 is going to go to things like washers and dryers and home improvement and tile and paint and all that other kind of different stuff. So the anticipation of stimulus is, well, I say is, it possibly will invigorate sales and boost sales. The other good thing that analysts point to is that dividends and share buyback for this company is a consistent trait of management. Now, I haven't talked about acquisitions very much, but there are acquisitions that do happen within Home Depot. They actually have one that they did recently for a company called HD Supply. And it's primarily a company that deals with maintenance, repair, and operations for businesses in that particular area. That's similar to a company that they acquired back in 2015 that's called Interline. And that expands where their growth is going to go into the future. Now, what are the bearish analysts saying about it right now? They're saying this. They're pointing to the fact that the longer the pandemic lasts, the less people are going to spend. Do you think that's true? The longer this pandemic goes on. Now, I'm going to turn that coin in just a minute with another analyst opinion. Also, there are changes that are proposed inside of Home Depot with their IT and their supply chain. And if they make changes, that could possibly delay profits or change them. And then the coin change from the first thing that I mentioned was, what happens when COVID-19 is gone? Let me tell you, friends, I'm with you. That probably can't happen soon enough. But as the pandemic wanes, as it gets less and less, people are going to spend money in different places. And there are some analysts that are saying that the tide's going to turn and that most of that money is not going to be spent at Home Depot. I don't know. You have to answer that question. Now, what's the fair value of this stock? I turn to Morningstar a lot for information, and I want to show you what their opinion is. They're saying that this company is actually rated as a 2-star company. Remember, the star rating is not like it is with mutual funds. It's based really on valuation, and they're saying that the fair market value right now of this stock's around $210. Remember, today it ended at $275.50. I put 58 here because that's where I had it. So in Morningstar's opinion, this stock's actually trading at 23.80, 23.8% over top of what the value is. Now, what are some of the other analysts out there saying about this particular stock? With 21 analysts that are offering an opinion on Home Depot, 12 of them are saying that this stock, yep, they're ringing the bell, friends. They're saying that this is a buy, but there's a few holdouts there. 2 analysts have a moderate buy, and then there are 7 of them that actually have put a hold on this going forward. But let's look a little bit further at what the competitors are. Now, this is an interesting fact. When I get to this point, we talk about the SEC, the stability, the earnings, and the competitiveness of the company. You would think that with everything that I've been talking about, that Home Depot is the best home improvement store ever. And it may be, but when it comes to value in the past year, they've been lagging as far as value goes. Now, they've done well. Gosh, I pointed to the fact that they did 25%. They've been one of the lottery winners when it comes to the pandemic. But if you look at the screen, you're going to see a company in gold. And I didn't pick the gold, the computer did, but that's Lumber Liquidators, friends. Lumber Liquidators over the past year has grown over 200%. That's amazing. Now, when we look at Tractor Supply and Lowe's, they've actually had better growth than Home Depot as well. Now, that's not saying that it's bad and it's not negative, which is, that's from the good side. But Lumber Liquidators really has been the lottery winner for the past year. But I'm going to take Lumber Liquidators out of this screen just for a quick moment and just show you how Home Depot compares to Tractor Supply and to Lowe's. If you looked at Tractor Supply's had a banner year, about 75% in growth. Lowe's has actually grown quite a bit too, just shy of 50%. And we have that 25% mark for Home Depot. But if you were to go and you look at the dividends, Home Depot beats them from that standpoint. Plus, you have to ask yourself, how's this going to be going toward the future? Now, why didn't we talk about Lumber Liquidators more, or Tractor Supply or Lowe's? Well, those are stocks to talk about for another day. What are the individual analysts saying about Home Depot? There's 21 different analysts that are offering an opinion, and I can't fit them all onto the screen. So what I do is I go through, today I went through and picked those that have the most impact on the share value and those that had been made most recently. So the most recent analyst gave an opinion that's from Guggenheim on the 13th, and they upgraded their opinion on Home Depot, and they put a price target at 310. Remember, today it closed at 275. So they're looking for it to go higher. The most pessimistic analyst that's out there right now is Piper Sandler, and they did their analysis back in November, their most recent opinion, and they looked for a price range between 288 and 296. Again, remember, it closed today at about 275. The most optimistic analyst is actually Bank of America. They're putting a range in between $330 per share and $350 per share. But look, I'm going to just remind all of you that are out there listening, these are just opinions. These are not guarantees. You have to use this information to decide whether this stock is fairly valued, or if you want to buy it, at what price that you want to buy it. Do you want to buy it at 275, or do you think that you need to wait a little bit? I'll just remind you that it was up over 2% when the rest of the market was down today. So this stock's continuing to grow as the future comes at us really hot and hard. All right. As I end for the day, I just want to remind you that the three pillars that we look for when we look at stock, we look at the stability, the earnings, and the competitiveness. Now they're a stable company. When we look at the earnings are consistent. When we think about competitive, well, they didn't get to the Lumber Liquidators close to 200% gain, but they had a really pretty good year. So from a competitive standpoint, they're actually doing pretty good. So you have to ask yourself, is this going to be a stock that would fit into your portfolio? And is it a good price for you now? Hopefully, I've been able to give you some information that will help you. And I want to thank you all for joining me today. If you have a stock, a lot of you wrote in last night, and I've got a lot of different requests, but I'll continue to ask because sometimes I run out and sometimes I can't fill every request. But my comment is this: if you have a stock that you'd like to learn more about, put it into the comments and write to me. If you have a question, I can't always answer questions, but I depend upon other listeners who write in. Give your opinion. You're always such nice people. And I always say this, you are the smartest audience in the world. You really are, because I give you very good information. You digest it. You ask great questions. So hopefully this has been helpful to you today. Thanks a lot for joining me. Have a really good weekend. And I won't be here Monday. We'll be back on Tuesday. We're taking Martin Luther King Day off. So have a great weekend, friends, and keep looking for stocks that interest you. We got to hit the right button, right?